Good evening, members. Steve here from theturtlefollower.com, where we teach you how to stop predicting and start reacting. We're going to take a look at the core account for Wednesday, December 16th, 2015. We had the Fed announcement earlier today, and if you guys are following along with the core account, we're going to have some adjustments to some of our trades, some of our stop levels, to potentially try and limit some of the losses that we have. But ultimately, model portfolio has been outperforming very well. You can see if we switch over to it, we have a couple huge trades for us working out very nicely. You can see here TSS up 480, PSA up 460, right across the board. So have a nice open P&L of 2,600 for the year, down about 2,000, but with the open P&L, we're up about 600. Remember, what is shown under the year is actually realized gains. A lot of that losses came from the downdraft that we had in August. We've been able to kind of chip away at it as we've gone back and back and back. And you can see here we had a big trade in RAI up 1,300. So nice to see the portfolio acting well. We're pretty much fully allocated here. You can see we're up about, we have a 91% allocation. We don't want to go over 100. The intention of the core portfolio is exactly what it sounds like. It's a core portfolio. It's something for your long-term investments, retirement, kids accounts, whatever it may be. So we're assuming that it's a cash account, not a margin account. So we're trying to stick to that 100% allocation or lower. So right now, I'm probably looking to only maybe add one more trade in the portfolio. But what I want to do today is just go through our existing trades and look at maybe some areas where we could potentially move stops to and limit some of the risk that we have on the table. So if you are just, taking a look at the market for the first time, the markets were up nicely across the board, up between 1% and 1.5% on the day. All right. And that really benefited our long only core portfolio. So here we are looking at the first position, Clorox, CLX. And you can see that it is breaking out to new highs. So with that breakout to new highs, I'm using the lows that we had from Wednesday, right around the 124.50 area, as our swing low. And that's going to be our new line in the sand. So you can see traded higher. We've bounced almost perfectly off of this trend line. 50-day moving average trading right below us. A nice little gain here that we have in Clorox. And we're going to again, limit that risk in the name by just adding the stop in. All right, DPS, this is a potential spot that you could add to the trade. Okay, we're putting this trade on in the trading account as well as a new trade. But if you wanted to, what we could do, or what you could do, is trail your stop up to 89 or so and go ahead and add to the position. For me right now, I'm not going to be adding to the position. I'm going to actually let this work a little bit more. But I am going to trail that stop up right around the 89 area. All right, and again, a breakdown from there would be, enough reason to get out of the trade. But just so you know, because we don't really add to the positions too often, if you want to take a look, you can go over right into the position calculator. And the way this works is you're actually going to put it in as if it was a new position with a new stop level. All right, and the stop level was what? 89. Sorry, not 99. 89. All right, so it tells you should have 103 shares. So if you go back to the core account and you look at DPS, we only have 84. So if you wanted to add to the position, you would add 20 shares to bring you to a full allocation with the stop moved. All right, so we would add 20 shares right here, and then you would average obviously your cost basis with a little bit at 94 and a lot at 91.50. So you'd come in right around whatever, 92.50, say, for argument's sake, whatever averages out to, and that would be your new cost basis. But you would add to your position to have full risk on the table with DPS. Home Depot, all right, just continues to hold this 130 area. It's great to see. I'd love to see that. Love to see the 50-day moving average playing catch up. The longer this goes sideways, the better it looks from a long-term perspective on a new breakout. So for right now, not moving the trade, not moving the stop. J&J was another new one that we just entered. All right, at or below. is going to be our stop, right around that 99 area. 99.50 to be exact, I think is where we called our stop out to be. All right, so we'll move our stop to that 99.50. Nice breakout. Just let the trade work. All right, here we are. L brands. You can see just chopping around right above the 50-day moving average. If we can get that breakout, we'll trail our stop up, but not until we get it. Lockheed Martin, again, still holding that 215 area. Right now, just let it be. Let's see what happens in the next few days. Looks like it wants to get stopped out, but it's not getting stopped out just yet. All right, here we are. Altria, that's exactly what we wanted to see. We broke this downtrend line that was in play. All right, so that's a great sign. We're still holding up above this 56 area, so you can see this consolidation held. And now target is at 61.50. We have a dividend payment coming out, exactly what we want to see. If you look here on the left, besides CRE, because this is my personal account, where I actually own some calls in that. If you look at every other one, look at all the yields that we're getting. All right, we're getting a huge yield on this portfolio. So it's not only performing from a price appreciation standpoint, we're also getting paid a dividend every quarter to hold these stocks. And we're in a high yield dividend account, and that's exactly what we're trying to do. It's a core account, build wealth over time, and that's what we're trying to do here. All right, so very simple methodology to do so. Northrop Grumman, we've trailed stop up to 182. Let it work. It looks like it wants to break out again. Right now, just let it work. PSA did break out. We trailed the stop up 235. All right, and again, that would have been one that you could have added to your position if you wanted to. And let's just, again, double check that. Let's go over the position calculator. Put in PSA. 235 is the stop. Tells you need 35 shares. If we go into the core account, it'll tell you that we have 37. So we're allocated correctly. Okay. Starbucks just moving sideways. Keeps trying to break down under that 59.50 area. Just won't close there. When it does, that's when we're out of the trade. SWK. All right. Holding up nicely. Had this shallow pullback. All right. Looking like maybe we could use that level as a future support, 106, or a future stop, 106.50. But until the 50-day moving average gets there, we don't want to really come close to that. So we're just going to let that trade work as well. And TSS had a brief breakdown below that 54.82 area. That's going to potentially be the next stop level that we're going to trail to if we can get that breakout over 56.50, 56.75. All right, so if we go through our watch list now, all right, so that's all the trades that we've adjusted. Let's take a quick flip through the watch list. You could see Nisour still trading within the range. Valero, similar. Rubbermaid had a huge breakdown, but it never really closed below that 41.73. Probably going to take this one off the watch list this week. It's just too sloppy for me right now. ACN, close to breaking out over the 110 area. GE, talked about this with the trading account, but looking for that breakout over 31 as well. AVY, sideways. IPG, sideways. EQR, equity residential, looking for that breakout over 81.25. Still not there yet. EQIX, sideways. So we have a lot of good setups. PAYX, sideways but bouncing. Coca-Cola. All right, this is one that I'm not convinced yet. I want to see a breakout over 45. All right, I'm not willing to put it on for $1.50 move and $5 worth of risk. It's not my style. All right, so I'm looking for that breakout over 45. PPL had the breakdown below 32.85. I think it was Monday. Didn't close back. Closed right below it, and has since traded back in the box. So this one looking like it may set up for a move higher. PepsiCo going sideways. All right, SJM close to breaking out as well over that 124.50. Adobe Systems actually shouldn't be on the list, and we talked about this. We put it in the trading account instead, but we talked about this because it doesn't have a yield. So Adobe Systems doesn't have the yield. That's why it doesn't end up in the core portfolio. All right, that's why I trade two portfolios. That's why I have the trading portfolio and the core. I separate them, and there's different criteria for each stock, and that's what tells me where I put them. All right, Cincinnati Financial just sideways. All right, and I don't think there's any other ones we added KMB. Okay, remember we talked about this the other night. Couldn't add it to the trading or the core portfolio because we were over allocated in the staples plays. We already have Clorox, DPS, and Altria, so we didn't want to add any future or any more staples plays, but we did add it in the trading account. All right, so, but as I said, if you guys had room in your core account, it definitely has a spot in there, especially with a 2.8% yield. All right, GIS, L3, Boeing just going sideways. J&J we did add. Okay, SYY we did add. Or I'm sorry, we didn't add, but it is going sideways. Sorry about that. Campbell's Soup, sloppy. Texas Instruments sideways. Raytheon close to breaking out. AIZ. The only other trade that I would bring to your attention is BMY. We're adding this tonight for the core or the trading account. But BMY, if we take a look at the trade grid, does yield 2.15%. All right, so if you're looking for another healthcare name, you could add BMY to your list. I think it's a good setup, good trade, nice weekly consolidation, breaking out of that, out of a little daily consolidation, so a dual chart breakout, breaking out on both charts. So if you did want to add that, you could. I'm not going to add that right now just because we did just add J&J. And I would love to actually add maybe another financial instead if we could. But for right now, with only one spot left in the portfolio, I'm kind of a little picky. But BMY is one that if you want another healthcare name with a 2.15% yield, BMY is just as good a choice. But other than that, that's really it for tonight. So we had a good week. We'll catch you up again tomorrow night and see anything changes. We did adjust a couple of those stops. And other than that, have a great rest of the night. Thanks for watching. Any questions or comments, leave them in the comment section below. And we'll catch you in the next one. Take care.